2, question 2. Question 2 was one again of those, very straightforward question, because you do have this kind of example in your textbook, and there is solutions to that in your textbook. Majority of students did well, but here is another way of putting it, an income statement or a statement of comprehensive income, right? So you are given the sales, you are given the cost of sales, you are now you need to work your way down. And again, I am putting it here clearly for you to look at it. The only issue that was here, the reason why I provided 2 solutions is because based on your theory, and we touched on this, based on your theory, there was the rent expense that also was part of your theory, where do you add the rent expense or you don't add the rent expense. People who did not, I repeat, people who did not add the rent expense were not penalized because they did nothing wrong. People who added the rent expense were not penalized. So that's why I'm providing 2 solutions. The one that majority of people did is this one, but some of you also did without the rent expense. It's not battering your marks. Your marks were just as fine as they were. So if you put the rent expense, if you don't put the rent expense, it's fine. But why is that? Because again, theory, even in your annotated, if you look at your notes, the annotated notes that I shared with you guys, yeah, we were talking about the rent expense. If you remember question, learning unit 2, question 2.3, we were talking about this. There was actually even a question in the chat concerning this. Do we add the rent expense, yes or not? The rent expense, because a company sometimes, the reason why it was not viewed as an operating or an overhead operating expense is because of the fact that it was not, first of all, an operating expense like it is defined should be in the short term, less than a year. Look, this is your theory. It says that expenses are costs incurred by the business that are not expected to be recouped, like stationery or wages. You're not expecting to get that back, right? And those actually are done. The rent is a fixed operating cost, usually on a 1 or 2 year contract. So it is long term. We are talking about a company, we're not talking about a person. So when a company signs a lease agreement, they sign it for the long term, not for the short term. So that's why it's not a day-to-day running expense for the business. It is in your notes, written, clearly, but it's fine. I didn't penalize a student who added the rent expense. That was also fine. If you added the rent expense, fine. But what you didn't, you needed to know is that you have your sales or your revenue. And in this case, it had to be net sales. There's a reason for that. It had to be net sales because you were also given, let me see what was there. Sorry about that. My screen, just wanna drag my screen here. Right, so you could have your revenue or your sales, but you could also have sales returns. These you needed to minus them, right? So you have your sales that you are making, but they gave you sales return there, meaning that you need to minus that. So you got revenue, but some of the product that you were selling were returned, so you need to minus that. So that's something to take into account. All right, and also one other thing, if you're looking at your cells, here are your cells. As you're seeing, your cells were given with 1,675,000 minus 56 gave you this 1,619,000. I repeat again, this is part of your theory. You have cells, but some of the cells, the money that you made, you had to return it because people return the goods. So let's say maybe you are a spaza shop, you are selling items, or let's a retail company, you are selling clothes. People buy clothes, they give you the money, you have the money, right? But then they come and they return the clothes. That's what we call a sales return. They're returning it. So you have to give them back that money. So I trust that that's clear. That's really clear. So sales minus the money that you had to give back give you this, right? But now you are also doing a type of budget because assume Asante Limited introduced the following changes. They giving the increases are, what the decreases are, and they ask you to prepare for a budgeted statement of comprehensive income. Budgeted meaning future, you are planning for the future, right? But they give you all these elements, but they also tell you that there will be a net increase of 8% in sales. That's basically what you did here. So the actual net sales is this, right? Net meaning that you take the revenue minus what you return, and then you need to increase it by 8%. Majority of you did well. So on the budgeted income statement, this is what you're going to put. This amount takes into account that increase, 8%. Straightforward. First line, the increase in net sale of 8%. What some people did, strangely, is this, is that they took the sales, they increase it by 8%, and then they minused the sales returns. Okay, that was an error because they tell you here an increased net sales. We are talking about the net sales. We are not talking about the total sales, the net sales, So that's what you should understand. So net sales, you get it by taking the sales minus the sales returns. I trust that that is clear. Wow. And then they gave you the cost of sale. All right. Here is your cost of sale. Yeah. So every item that is provided to you is quite very important. They give you the cost of sale. This is the cost of sale. And they tell you that the cost of sale, something is going to happen to it, is that they're going to be an increase of 15%, second line, 15% in cost of sales. Easy. This is the game you had to play, is that if you increase, obviously, if you have sales minus cost of sales, what do you get? You get gross profit. And now, if you remember your income statement, what do you need to do now for your gross profit? You need to look now at the operating expenses and the operating income. All right, they gave you all the operating expenses, and you had to take those operating expenses and look if they are increasing or if they are decreasing. All right, again, 101. I have to say many did quite well, and anybody who did not use the rent expense was not penalized. So I trust all is clear. But for those who were using the rent expense, this was the total. Anuske, any question on this? You did pretty well.
It's all good, sir. I got it. I just I took it out after you told us not to put in the rent expense, and then I forgot to recalculate my tax. So
No, but all good, all good. Remember, nothing was penalized there. But again, look, as soon as you take the operating expenses, you minus the operating expenses, you add the operating income. An income is a plus, an expense is a minus. Then you get the net operating profit. And now you need to look at your interest expense and your interest income. Obviously, interest expense will be a minus and interest income will be a plus. That's how you get to your profit before tax. And obviously, if you have your profit before tax, you minus the tax, then you get your profit after tax. Guys, these examples are straightforward. People did quite well. I did explain even how you look at the reduced interest income. They gave you the reduced interest income of 6% and an increased interest expense of 7%. So if somebody is not understanding this, I don't know what to do, because 100% is like 1. This is simple calculus. Somebody got this wrong, but if you are minusing 6%, 100% minus 6%, my bad there. So let me just put it like this to make it 100% minus 6%, because there is a decrease of 6%. So the answer will be 94%. And how do you write 94%? 94 divided by 100. I don't know why I need to do this, but if you calculate 94 divided by 100 is 0.94. I'm sorry, but I'm having students who are struggling with this. This is simple calculus fractions that you did at high school. And if you're struggling with this, there's a big concern there. So guys, be careful there. Okay, question 3. I have to move a bit faster now. So when it comes to question 3, this is quite well detailed, all right? And it's quite simple. They were asking you a simple question here. What were they asking you? Calculate the trade data collection period. Oh, the data collection period, right? So trade data, don't be confused. They are just asking you the data collection period. You know that it is data divided by credit sales, but it's a period. It's a period. So multiply by 365. Simple as that. So by your textbook, you could see that this is straightforward, right? So I gave you the simple answer and I gave you the more advanced. Why did I give you this? Because the question gave you quite a lot of things inside, and people who did the advanced methods, guess what happened to them? I gave them more marks, bonus marks. But if you did the simple version, I did not penalize you. I gave you all the marks also. So I repeat again, if you did the simple method, you got all the marks. If you did the advanced method, you got bonus marks, right? And I will explain to you why. Because everything that was given to you here must make sense. For example, they're saying that the policy of the firm is to add a markup. Now, if you understand the markup means that I have a cost, I buy something at 5 rand, and I put a markup of 25%. 5 rand, I put a markup of 25%. Okay, this is quite simple. I buy something at 4 rand, and I put a markup of 25%. What will be the cost? What will be the new, how much am I going to sell this? I bought it at 4. How much am I going to sell it if I'm adding a markup of 25%? I'm going to sell it at 5. So I'm going to take 4 multiplied by 1.25. As simple as that, it gives me 5. So markup is what you are adding so that you can get a profit, right? Or so that you can cover some other costs, right? That's all. This is in your textbook. So basically, what they're saying here, why was this important? They're telling you that 90% of all the purchases are on credit. but the purchases equal 85% of the cost of sale. You have cost of sales, you buy goods, but there is also other costs that are implicated. So I need to buy goods. I buy, for example, shirts. I buy a packet of shirts cost me 15 Rand. In order for me to get it delivered, the shipping, the ferrying, whatever it is, I need to add another 5 Rand. The total that I'm spending for this good is 20 Rand. So all purchases are not necessary. So all cost of sales are not just these 15 Rand are paid for the good. They can include other fees, other costs. So they're telling you the purchases themselves are 90%, are 85%. So when you're looking at your cost of sales here, how do you get your cost of sales? There is a gross profit. You minus the revenue, you minus the gross profit, and then you get your cost of sales. Now they're telling you this cost of sales, the actual purchases of the merchandise, the actual purchases is 85%. So what you do is you take 85% of these, 85% of these, 85% of the cost of sales is this. That's 85% of this cost of sales. 85% of this cost of sales is purchases. We purchase goods, 85% of it. And then they tell you 90% of all these purchases is uncredited. 90% are coming down here. 90%. So 10% only cash. You only paid cash 10%. The other 90% you're going to pay later. Credit purchase means that I'm going to pay later. I repeat again, credit purchase just means that I'm going to pay later. You know this. I have to repeat this because if one of you is struggling with this, I need to say it. So 90% of this 85%, 90% of it, this 85% is credit purchase. Now this credit purchase, so whatever the markup I need to do to get a sale. So a sales, I will do purchases plus the times the markup. That how I will get my sales. All right. So this sort of advance, which only one student did, I won't waste too much time on it, but this is the reason why we're doing this. This is the reason why we're doing this. So actually, might be a slight mistake on but you do have the correct version. All of you have the correct version in what I shared. The solutions that you have there is slightly different, but it is the correct. It is the one that you have there. Anuske, the numbers are a bit different here, right?
Which number, sir?
No, I was saying, do you have your OneNote open?
Oh, no, I have my assignment open, but not my OneNote.
Oh, okay. So if you have your assignment, you only did this one, the simple version. So what we do, we just take the 60%. So because, how do we know? Because they told us 40% of all sales are on cash, which means that 60% is on credit, right? 60% is on credit. That's why you took the total revenue. We are assuming that the total revenue has to do with the revenue that came from our sales. So 60% of the total revenue gave you this. And obviously, in order for you to get the trade receivable or the debtors, trade receivable equal debtors, you were given 3 years. Why? Because you need to get an average trade debtor. Meaning if you're looking for the one for 2023, you will take the one for 2023 and the year prior, 2022. You add them together, you divide by 2. Simply, very simple. And every one of you managed to do that, okay? When you're looking at 2022, you take the one of the prior year divided by 2, and you get this. All right, Anuske, on your paper, is that correct? Let me interact a little bit.
Sir, there's the number that you just, I have the days. I'm a little bit lost with the rest.
I'm not too sure what you mean, but I'm saying, did you get the data? Remember the formula? Here is the formula. Data
Yes, I
divided
have
by
the
credit
formula.
sales.
No, I don't have that.
Multiply by
is equals 59 days.
No.
Is that?
No, don't look at this. There's the advanced method and there's the simple method. I'm looking at the simple method, the one that you did. And I'm
Yes,
asking
I did
you
that. I have those numbers.
Yeah, that's what I'm looking at. So I'm saying,
okay.
You got the data. Did you do the data for 2023? You did 2023 data for 2023 plus data for 2022 divided by 2. Did you do this?
Yes, sir.
Okay, straightforward. The majority of the class did it and passed. So 180 divided now by this 540. What is the 540? It is the credit sales. Credit sales. I repeat, credit sales. It's 60%. 40% was cash. 60% was credit. So 60% of 900,000. 900,000 was your revenue for 2023, and 650,000 was your revenue for 2022. 60% gives you this. You take the 100, the data divided by the credit sales multiplied by 365. The answer should be 94 for 2022. It says 93.58. It's almost like 1 day is divided. So that's why it is rounded to 94. So, but it's fine. If you put 93.58, it doesn't matter. I gave you marks, so there's no issue. All right. So now the question was.
I have a question. Sorry. So I round off, like I did 121.67, because if you round to the second decimal, then you look at the third.
I again explained, Anuske. Again, I explained. I say that comma 16 whatever. You are talking about days. So there is no such thing as comma 16 days. That's why we just simply say 1 day. So better round it because you are talking about days.
Yes, yes. So I understand that part. Like I didn't do that part, but
but it doesn't matter. Like I said, I gave you marks. It does not matter. Even if you did not round it properly, you had full marks. But I'm just saying the logic of this, especially for other students who are listening to us, is that you can't say half a day or a quarter of a day and all that. Just round it to a day. But it doesn't matter really because you got the marks there. So let me go to the interpretation. What is the interpretation now of this? Then you can look, you went from 94 to 122. 94 to 122. What does it say is that it's not a good thing. You're taking too long to collect the debts from your debtors. Because, and again, you have also to look at the industry. They told you that the industry debt collection, trade collection is 60. So when you have 94, is way over the industry. So these are the things you just needed to say there to interpret your results, okay? Okay, last question. I have to go a bit quicker here because it's gonna be close to 1 hour soon. And this again was another one that was quite straightforward again. I don't know why some of you were struggling with this, but it was simply quite straightforward. Assets equal equity plus liability. I was shocked that some people did not know what is this total asset. It's straightforward. You take total equity plus liability, you put it here. Simple. Simple. Why? Because asset equal equity plus liability. Straightforward. Okay. I was quite glad that, I mean, those who have been engaging did not struggle whatsoever. They managed to get the 25 marks. All right. So, but what are we saying here? They're giving you here some students struggle with this. Non-current liability divided by equity. They give it to you here. Non-current liability divided by equity equal 3.2 divided by 1. That's what they give you. What do you have? What do you have? You have the, non-current assets. Sorry about that. It's non-current asset divided by equity. What do you have? You have the current asset. How did you get the current asset? Well, you got it because they gave you the inventory plus the trade receivable. Here it is. You just add these two together. That's how you get the current asset. Now, current total asset equal current asset plus non-current asset. Now, how do you find this non-current asset? Non-current asset equal, oh, I don't know what's going on here. Non-current, my pen is acting out. Total asset minus current asset. Simple. That's how many of you managed to get that. So we have the non-current asset. We don't have the equity. How do we get the equity? Simple. Equity, you just need to shift it like this. I mean, this is high school level. So equity will be equal to, you shift this one there, this one will come down here. So non-current asset divided by 3.2. Simple. Some of you didn't manage to get this. I'm very worried because this is again simple fractions. Simple fraction. What they mean is that if you multiply this, you multiply like this, they mean that the non-current asset, that's what they mean. Non-current asset equal 3.2 times the equity. That's what they mean. Not sure why this fraction would have a problem with a tertiary student, but I say not everybody struggle with this. So, but I'm just putting it here in case any one of you were struggling with this. That's what it's all about, is that find what you have, what is known, find the unknown from it. So obviously that's how we found for 2023 we found this 140,000, and for 2022 we found this 180,000. All right. What was missing here was the issued share capital. So if we have 140, then 140 minus this accumulated profit of 40,000 gives us this 100,000. Easy. Anuske, was it easy?
Yes, sir. As long, if you remember the rule, assets equal equity plus liabilities. But I didn't have accounting in high school, so for me, I had to think about it.
Yeah. but you did well. Yeah, but again, certain things, I'm saying to the other students, certain things are not my job. I don't need to teach people fractions at this stage of your life. So you need to have some back. If you feel like there's something that you do not know, rush quickly, try to check it out, how to take a quick look on the internet, and yeah, that's it. And yeah, get this sorted. But the same is for non-current liability divided by equity, same thing. If you were looking for the non-current liability divided by equity, the non-current liability, you had to find it. You had to find it somewhere. And how do you find it? Obviously, you have asset equal equity plus liability. So if you have the top here, if you have the equity, finally you manage to get the equity, you can get the total liability. You just take the asset minus the equity, you get the liability. You can get the full liability. And now they give you even something on top of that. They tell you here that non-current liability divided by equity, non-current liability divided by equity, they give you for 2022, for example, they say it's 2.5. Wow, but I managed to get the equity. I know what the equity is, but I don't know what the non-current liability is, but I know what the equity is because I found it, right? So again, what this means is that non-current liability equal 2.5. It's 2.5 times more than the equity. That's what it means, simply. You have the equity, you are looking for the non-current liability. You just use this. Easy, 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 easy. Like I said, I was very surprised by this assignment. It was very, very easy. I would have expected it to be a bit more difficult, but that's it for the revision of this assignment. I trust that you can see how you're going to do assignment 2. So go into assignment 2, even on the theory part. Some of you wrote too much, I have to say. Some of you wrote too much, but as you can see, I gave you an example of what you need to write. You need just to write a line. Obviously, you need to properly reference them. Those who have referencing issues, I'm urging you at this very moment, I'm urging you to really please go and do what is right. Please go do what is right. There is also plagiarism, referencing session, course that has been organized. Try your best. It has been sent into your notification. Try your best to attend if you are still struggling. You are a second-year student. I cannot be going with you on the basics of proper referencing. So please earn that skill. Work hard to get that correct. Anuske, how was it? Thank you so much. First of all, let me start by thanking you for participating. Very encouraging, but does that make sense? I mean, you did well already, so but does this assignment, was it quite straightforward? Was it quite easy, or did you struggle quite a lot?
Sir, I think it was quite straightforward. Like if you do the exercise, and I did the exercises in the textbook, so I think
Yeah.
that kind of like the practical work was good, but regarding the theory, like I think the textbook could be a little bit misleading, and I think that's why like I misunderstood some concepts. But maybe that's just how
no
my brain
problem.
works.
No problem. But no, but remember again, that's the reason why I'm here. So go through your theory every time. If you see something that does not make much sense, please let's discuss it together as well, right?